Well, earlier I spoke to Heather Long, economics correspondent at the Washington Post, and she started by discussing what's behind those strong GDP numbers.
Two key things that are driving it, though. One is a good thing. One is more consumer spending. Americans are opening their wallets. They're buying goods. But the other thing is a quirk. It's been dubbed the magic bean. That refers to soybeans. There was a huge surge in exports in the second quarter from the United States as other countries gobbled up U.S. products, in particular agricultural products, before the tariffs went into effect in the escalating trade war. That is a one-time blip. It inflated growth this quarter and probably won't be there in the future.
So speaking of sustainability, we saw this, as you said, strong consumer spending, exports, and also business investment were credited with helping drive this second quarter growth. But how sustainable are they?
That big boost from trade, that magic bean effect of the second quarter is not going to last. We're already starting to see the trade deficit widen again in the United States. And many economists believe that in the third and fourth quarter, trade will return to being a detractor as opposed to a big booster. President Trump mentioned today, he's not trying to hide it, that extra exports added almost an entire percentage point to GDP. So if you strip that out, we're looking at a lot closer to 3% growth than 4%.
Now, many analysts also credited the U.S. tax overhaul for strong growth, but a lot of business leaders believe that this is actually being offset by a lot of these trade concerns. What are your thoughts about that?
At the moment, we have not seen too many tangible impacts of the tariffs and the trade war. Don't get me wrong, a lot of CEOs are very concerned. You hear the big car makers like General Motors warning that they might have to do layoffs if the auto tariffs go forward. But as we've been reminding people with the Washington Post Trump tariff tracker, the reality is under 4% of U.S. imports currently have tariffs on them. So we're still talking about a very small amount in the context of a larger economy. The key is, does Trump stop here, or does he go forward with more tariffs?
And that's the question a lot of people are wondering. If these tariffs go on and they keep going, these ongoing trade disputes, and you also have rising public debt, both issues that the IMF has said are going to affect the U.S. in the long term when it comes to its economic growth. So what do you think needs to be done to address some of these issues that we're seeing?
Well, the easiest one to address is the trade one. If President Trump is able to strike some deals and do some renegotiations in the coming months, let's say by Thanksgiving and the holiday season, that would take a lot of pressure off the economy and certainly keep things going full steam ahead into 2019. The other one you mentioned is critical, and that is the U.S. debt. It's been alarming for a while, and a number of economists say it's really reaching a critical level. Even military leaders are warning it could really hamstring the United States going forward. And that one, there is no easy solution to. We all wish there were. Republicans and Democrats keep talking about it. They want to address this problem. There's been almost zero action to do so.
But as we look at the fundamentals of the U.S. economy, what would you say are its biggest strengths and its biggest weaknesses at this point?
That's a great question. The biggest strength is the American consumer. We saw it today really powering the bulk of the growth we saw in the second quarter. Americans, they continue to get jobs. We are hoping to see some more wage growth in the United States this year. All of that is helping to translate to making American families feel more comfortable to go out and buy things. Remember, the U.S. economy is 70% powered by consumer spending. So if that's healthy, that's going to go a long way to keeping growth strong. In terms of the detractors, the number one on every business leader's list is the trade. We've addressed that already and talked about what a headwind that is going forward with all the uncertainty. I think the other key one you mentioned, there's a huge debate, these tax cuts that were done. You know, we're talking about the largest corporate tax cut in U.S. history in December. We're 6 months into this new era of a new tax code. That was really supposed to drive a huge amount of business spending on new equipment, new factories, hopefully on hiring. So far, we've seen a little bit of that. So non-residential fixed income, as it's called, was up about just over 7% in the second quarter. But by historical U.S. standards, that's not knocking it out of the ballpark. It's a good figure, but it's not a great figure. We're going to need to see much better and much more business spending going forward.